Welcome back to this week's Sector Review, where we dive deep into the market movements from August 18th through August 22nd, 2025. Today, we're breaking down the performance of each major sector, providing you with the insights you need to stay ahead in this dynamic market. Let's kick things off with a bang. The technology sector has once again proven its dominance, leading the charge with an astounding 9.2% gain this week. That's a whopping $78 billion increase in market capitalization. But what's driving this surge? Let's take a closer look. Software giants like Microsoft and Oracle have been the primary catalysts, with their stocks climbing 11% and 10% respectively. The software sub-industry as a whole saw a remarkable 10.5% uptick. Not to be outdone, IT services followed closely with a 9.8% increase, propelled by strong performances from Accenture and IBM. Notably, the technology sector formed a bullish continuation candlestick pattern on Thursday, signaling that the current uptrend is likely to persist. This pattern emerged after a brief consolidation period, with the sector reaching its weekly high of 3,850 points at 2:45 p.m. Eastern Time on Friday. The low of 3,520 was recorded early Monday morning, showcasing the sector's resilience and upward momentum throughout the week. Moving on to the basic materials sector, we observed moderate but steady growth. The sector posted a 3.8% increase, translating to a market capitalization change of $28 billion. Mining stocks were the standout performers, with Newmont Corporation and Agnico Eagle Mines leading the pack, both up over 6% for the week. A bullish engulfing pattern formed on Wednesday for the basic materials sector, indicating a potential reversal of the previous downtrend. This technical signal, combined with strong commodity prices, suggests that investors are becoming increasingly optimistic about the sector's prospects. Shifting our focus to communication services, the sector experienced a mixed week, but ultimately finished in positive territory. Overall, the sector saw a 2.5% increase, adding $18 billion to its market cap. Social media giants Facebook and Twitter were the primary drivers, both posting gains of over 5% on the back of strong user engagement metrics. However, it wasn't all smooth sailing for communication services. Traditional telecom companies like AT&T and Verizon faced headwinds, with both stocks declining by approximately 1.5%. The sector's weekly high of 225 points was reached at 11:30 a.m. on Thursday, while the low of 215 points occurred during Monday's opening hour. The consumer cyclical sector had a robust week, buoyed by strong retail sales data and positive consumer sentiment. The sector climbed 4.7%, increasing its market capitalization by $42 billion. E-commerce giant Amazon was a standout performer, surging 7.5% and reaching new all-time highs. A notable development in the consumer cyclical space was the formation of a golden cross on the daily chart. With the 50-day moving average crossing above the 200-day moving average, this bullish signal suggests potential for further upside in the coming weeks. Turning to consumer defensive stocks, we saw a more modest performance as investors rotated into riskier assets. The sector still managed a 1.8% gain, adding $15 billion in market cap. Procter & Gamble and Coca-Cola were among the top performers, each rising about 3% on strong earnings reports. The energy sector had a volatile week, but ended on a high note, posting a 3.2% gain and increasing its market capitalization by $22 billion. Oil prices played a significant role, with WTI crude climbing above $80 per barrel for the first time in 3 months. ExxonMobil and Chevron both saw gains exceeding 4%. While renewable energy stocks like First Solar also performed well, up 5.5% for the week. A hammer candlestick pattern formed on Tuesday for the energy sector, suggesting a potential bottom and reversal of the recent downtrend. The sector's weekly high of 580 points was reached at 3:15 p.m. on Friday, while the low of 545 points was recorded during Tuesday's morning session. Financial services had a solid week, with the sector gaining 3.5% and adding $45 billion to its market cap. Banks were the primary beneficiaries, with JP Morgan Chase and Bank of America both up over 5% on expectations of continued high interest rates. The sector formed a bullish flag pattern on the weekly chart, indicating the potential for further upside in the near term. The healthcare sector showed resilience, climbing 2.8% and increasing its market capitalization by $38 billion. Pharmaceutical giants Pfizer and Johnson & Johnson led the charge, both up around 4% on positive drug trial results. Notably, the sector formed a cup and handle pattern on the daily chart, a bullish continuation pattern that could signal more gains ahead. Industrials had a strong showing, with the sector rising 4.2% and adding $52 billion to its market cap. Aerospace and defense stocks were particularly strong, with Lockheed Martin and Raytheon Technologies both gaining over 6% on new contract announcements. The sector's weekly high of 890 points was achieved at 1:45 p.m. on Thursday, while the low of 845 points occurred during Monday's opening hour. The real estate sector faced some challenges this week, but still managed to eke out a 1.2% gain, increasing its market capitalization by $8 billion. REITs focused on industrial and data center properties outperformed, while office and retail REITs lagged. A doji candlestick pattern formed on Friday for the real estate sector, suggesting indecision among investors and the potential for a trend reversal. Lastly, the utilities sector played its traditional defensive role, rising 1.5% and adding $12 billion to its market cap. NextEra Energy and Duke Energy were among the top performers, both up around 2.5% for the week. The sector formed a rising wedge pattern on the daily chart, which could indicate a potential pullback in the near future. In the world of private companies, we saw significant movement in the valuations of several unicorns. Stripe, the fintech giant, saw its valuation increase by an estimated $5 billion after a successful funding round. Meanwhile, SpaceX's valuation soared by $10 billion following the successful launch of its latest Starship prototype. As we wrap up this week's sector review, it's clear that the market has shown remarkable resilience and strength across multiple sectors. The technology sector's continued dominance, coupled with solid performances from cyclical sectors like consumer cyclical and industrials, suggests that investors remain optimistic about the economic outlook. However, it's important to note that challenges remain. Inflationary pressures, geopolitical tensions, and the ongoing global health situation continue to pose risks to the market. As always, investors should remain vigilant and diversified in their approach. That's all for this week's sector review. Remember to like, subscribe, and hit that notification bell to stay up to date with our latest market insights. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.